Hello, I'm Jeremy Zwinger at the Rice Trader. It's just a pleasure to be here again after a week break. Just to be back after spending a bit of time at the ocean with the family and many of us watching the World Cup. This is the June 25th summary of the Rice Trader. It is kind of an interesting week. It's both active and quiet. Just to start out, I have 10 points to talk about as every week. I think the first one is just kind of looking back at an old friend who actually taught me quite a bit about the rice industry. Old Ricardo Hong from Glencore was one of my early contacts when I started learning rice, and he actually taught me quite a bit. And he remembered when I was younger and didn't quite know a lot about football, soccer. He told me about the World Cup effect, and I thought he was messing with me the first time I heard this, because obviously in the U.S., especially several decades ago, we didn't look at football, soccer very much. And he always reminded me that during the World Cup, rice trade will be slow. And it's hard to talk to your friends. It's not going to be a time where you're going to see a lot of trade. It's not going to be a lot of activity in the market. And you definitely see that, especially in Latin America and European countries, and obviously Asia to a point. So we're definitely, I would call this week the World Cup effect. You're seeing some slowness, but you're also seeing a lot of activity in a subtle way. I'll get into that in a second. But definitely we're seeing the World Cup effect that'll go on until, I believe, it ends on the 17th of July. We'll see a bit of focused trading between games, one might say. So just to start out with key points, and there has been some big price movements this week, and I think that's where you have to start. Just to look at the price changes, I think Thai is the place to start. I mean, obviously Thai went from 5% to 408. That's a massive drop in a week, and it's similar to what we've been saying. You are having the highest stocks globally since 2001. And I've repeatedly said this, that we were probably underestimating the supply and demand effects on this market, because supply is just huge. And it's not just rice, it's wheat and other commodities, but just rice alone, we were at the highest stocks since 2000, when obviously prices were dramatically lower. And I think that's part of what's happening in Thailand as prices drop. We also have to say, and there were prices lower than that 408 also offered. So there was even $400 5% offer over here. So it's probably downward and continuing. But at least for this week, India is still quoted lower, and you're seeing this in the trade. I just put a note down here. In the current price structure, I just have to say Thai rice is a bargain when I look at the origins. It's almost it's $42 lower than Vietnam today, $32 lower than Pakistan, and basically are parallel with India. If you're out there, we have many buyers and sellers in the market. I just say Thai rice is a for sure bargain based upon the quality and the price differences. You see it a few times. You saw it last year just for a brief moment. If Thai goes to a discount to the market, demand is going to spike up. So kind of moving to that in a relatively equal level. World trade is up 3.76%, and Thai is having an amazing year. I mean, you're seeing one of the best years in history even amongst this, with basically 5.2 million tons already booked by about today. That's a tremendous jump over even last year. It's a 2% increase, but yet still it's 900,000 tons lower than India. I mean, India is having the best year on record by so much. It's unbelievable. I mean, they're on pace to break 12 million tons, which won't happen, but you have to realize that is the pace. They could hit 12, actually maybe slightly over 12, if the pace continued, which I don't believe it will. So even with this, this action, you're just seeing an immense amount of trade occur, which is what you need when supplies are so high. And you're also seeing China play the buyer and seller game. You're definitely seeing sales into East Africa. You're definitely seeing sales in other areas with these old crop stocks. And so that's kind of changing as China works to deal with its stock, its very high stock of commodities, and why is it carrying such high stocks even today? So to move on, we've went through many points. Now I'm going to kind of move away a little bit from rice and talk about some of the ancillary issues. What are some other things that are really sticking in my mind as key things to watch? Like we've been talking, oil has been key. It's definitely dropped from the highs. OPEC is reported to have booked in a deal today. which will probably depress oil prices further, probably sub 60, maybe into the $50 range. And that'll take some pressure off the grains as well. But it has already affected production costs significantly this year for the growers in this level of growing season. And so I definitely see an issue as far as price and this oil price, because it's had an effect on production. And you have old crop prices in the US and in Asia very high. But you see the spread in the futures market between old crop and new crop is about $2 a hundredweight, from 12 and change to 10 and change a hundredweight. That's a huge spread from old crop to new crop. We're seeing the same thing in California, where old crop paddy prices are quoted at $19 over loan, are about relatively $25, $26 a hundredweight. Half that value potentially in new crop. And just a massive spread again remains between the U.S. values and Asia. I mean, if you look at again the value between Thai rice, which I consider the premium, the best rice in the world today, it's quoted at 408, and we call U.S. down this week at 580. That's just too big of a spread. You're $170 plus a ton. That can't concur, especially if the U.S. having such a huge crop coming off. And you're going to have trades going to Latin America. You're going to have buyers wisen up to the fact that you can get equal to better quality at cheaper price. That's always a recipe for problems. And so I do see problems in the U.S. There's quality problems, there's price differential problems, and there's political problems. The U.S. has got some big challenges ahead, which goes into the next piece. One of those big challenges is, of course, China. These retaliatory tariffs between the U.S. and China are very significant. We warned about them over the last several months. And it's definitely affecting the soybean market, and it's definitely starting to affect the rice market, with them listing rice as one of the potential items that they're going to do retaliatory tariffs from China. So obviously we still don't have the U.S. rice going to China because they haven't approved a phytosanitary agreement, which has been a trade friction, because obviously you can use these issues to not allow trade to happen, as we all know. So the U.S. is already not trading to China rice. It's not trading to China rice even more so it's really the same thing. But these trade agreements are pretty critical, and it's a dangerous game that these countries are playing. In addition to that politics, and we have a summary of this in the rice trade this week, the Farm Bill is getting very close to being reinitiated. It seems to be very similar to the previous one. And with prices swinging downward, a lot of these factors in the Farm Bill, these safety nets, could definitely hit in over the next 3 to 4 years. And I would just say, on one of the additional points, we continue to believe that you're in a negative period. It's going to last about 4 to 5 years, and then you're going to go into an extreme supply short as the ground solar minimum hits. You're really in a worst case scenario. Prices are going to depress, people are just not going to evaluate food as much as they should, and then we're going to have a real issue, is what our longer term vision is for this market, as the world really deals with oversupply of food to undersupply of food, which is really what we've done throughout history. It's either too much or too little. Anyway, just to wrap it up a little bit, I would also watch Egypt and the effects in the Japonica market. A lot of people believe that Japonica rice will trade into Egypt. It actually doesn't seem to be the case. Egypt is talking about buying as much as 1 million metric tons. We've talked about this over time. There's really an 8-ish year cycle in Egypt where they go from buyer to seller, seller to buyer. But they're definitely going to be buyers. We expect it to be the lower to medium quality rice out of Asia, and they'll probably export a little bit of Japonica rice while importing indica. That's kind of what you see there. But it definitely shows you the effects on water that's occurring, and how water reductions and the push from the government to reduce water usage has led to price increase and a shift in buying policy. So definitely watch Egypt as kind of a gateway into what we could see in other places. Just on that, I guess I would just say there's a lot of elections going on, including the fight in the U.S. towards our elections in the midterms. You have India coming up, and just a lot of stuff. Malaysia, there's a lot of interest in what's going to happen with Burnus. We're seeing shifts with NFA, we're seeing shifts on a lot of international levels. And all of us to know, back to, again, my mentors, whether they be from Thailand or South America, you have to remember rice is obviously very political, like all food. And once we think we know what's going to happen, it only takes a ban of exports, it only takes a massive shift, opening of trade, it can affect the market. Mind you, this isn't one of the highest supplies I've ever seen, and so it's clear what supply and demand is saying prices should do. Like I said often, is we may be mentally even keeping this market up higher than it should be based upon what we've seen in the grains and based upon what we see with the high supplies. we may have to be at much lower prices to deal with this high supply, even though these supplies will be needed in just a few years. So with that, I've probably talked more than I needed to. I really enjoy speaking with you, and I know I'm getting a lot of comments and thoughts from a lot of our clients on what they'd like to hear about, and hopefully we're giving you good service. Please continue to share those thoughts so we can improve our videos, and I look forward to talking to you next week.